Friends, welcome to our today's session. This is the seventh session on charge of GST. Various aspects we have covered, and we are continuing the discussion on composition levy. How composition levy will be charged, that discussion is going on. I'm going to share the screen with you right now. I think screen is visible to all of you. Is it visible?
Yes, sir.
Yeah, we'll continue our discussion on this area, composition levy. Give me a minute. Well, this discussion on composition levy, some basic things we have already discussed. What is regular levy? What is composition levy? You already know. In earlier classes also, we have compared between these two schemes, regular levy, regular scheme and composition scheme. Without seeing this slide, can any of you tell me the difference? Let me ask some of you. Yeah. Few differences I want to know between regular scheme and composition scheme. Who can tell me? Can any one of you tell me? Anurag, can you tell me? Shweta, can you respond?
So I'll answer.
Sorry?
So I'll answer.
Drishti. Yeah, Drishti, please speak.
So in regular business, both interstate and intrastate transactions are allowed, but in composition levy, only intrastate transactions are allowed.
Good.
And sir, ITC is allowed in regular scheme, and ITC is not allowed in composition.
Very good. Then?
Other than that, um, other than that, so tax collection on sales is allowed in regular scheme,
Okay.
but it's the same is not allowed in composition scheme.
Right.
Um, so and there are then we consider different rates in case of traders and restaurateur or and
Okay.
a
Good.
service holder
Yeah.
in case of composition scheme. Yes, sir.
We pay
And
at a concessional rate. Now, one more thing, just you tell me about this turnover limit. Anyone else also can say, or you can say,
so
turnover limit for composition levy.
in case of uh, trading, it's 1.5 crores, and in case of service holders, it is 50 lakhs.
Okay. Good.
Right, sir?
Okay. So, as you know, most of the things you already know. Yeah. So, broadly, this is the difference. Many times you have discussed about this thing, regular rates versus concessional rates, ITC versus no ITC, interstate and intrastate supply versus only intrastate supply, GST collection, no GST collection, tax invoice and no tax invoice. What kind of invoice or what kind of bill a composition dealer can give? Any idea? We cannot give a tax invoice, but what we can call to that invoice? Any idea? Okay, that is referred to as bill of supply, and no specification in the invoice and composition levy supplier has to specifically mention that he is a composition levy dealer. He is not supposed to collect GST. All these things should be mentioned. Okay, various technical points are there regarding composition levy. Some of these have already been discussed, and some of them we are going to discuss today. Right? As you see this slide, the supplier must issue a what supplier should issue in case of composition levy? Can you read it here?
Bill of supply.
Bill of supply. Okay, and also the supplier must mention the what's composition taxable person in the bill of supply. Okay, supplier cannot collect GST. Supplier cannot claim ITC also. Okay, annual turnover you already told 1.5 crore for traders, and for service providers it is up to 50 lakh. And here what we have to do to arrive at this aggregate annual turnover with the same PAN will be added. Okay, the entire turnover will be considered. And this option required to be given electronically in a particular form that is called as GST CMP 02 form prior to commencement of the relevant financial year. And this option also can be given at the time of application for registration. Will be when you will be practically doing the registration exercise, at that time also you can find out this option is there. Okay, it cannot be given during the year, but however during the year one can move from composition scheme to regular scheme. Okay. And now uh, one more thing also you have to remember. Composition scheme dealer has to pay when tax is payable on reverse charge mechanism. If reverse charge is applicable, so as per the rate, as per the normal rate, composition dealer has to pay tax on reverse charge basis. Okay. And this chart also we have seen. Earlier we have compared this chart between composition scheme and regular scheme. Right? Under composition scheme, a prescribed rate is there. On that rate, tax has to be paid without adjusting input tax credit. And under regular scheme, adjustment has to be made for ITC. Input tax credit has to be adjusted and the differential tax has to be paid. And as you say, composition scheme dealer cannot make any interstate supply, but regular scheme dealer can make interstate supply. And rates of composition dealer is 0%, 1%, 5%, 6%, etc. Higher rates like 5%, 12%, 18%, 28%, and 0% is applicable in case of regular scheme. Yeah, one more difference is important for us. Composition dealer has to pay tax on quarterly basis. Regular dealer pays tax on monthly basis. Right? And annual return has to be filed. Annual return also has to be filed here. Composition dealer cannot make supplies to special economic zones. There is no such restriction for regular scheme dealers. Composition dealer can opt out from composition anytime during the year. Right? But nobody can opt into the composition scheme during the specified year, during a particular year. And these are the rates, for composition scheme: 1%, 5%, 6%, and the effective rates we have discussed. And some exercises we have done it. And after that, section 10 we are discussing regarding composition levy. This part I think we have already covered. Right? We have covered or not? Section 10 I think we have already covered. Can you reply? We have discussed this part. Well, quickly let me cover it once again, if it is already we have already discussed. So, if you read this particular provision, just a minute. Yeah, calculations, etc. we have done earlier. Broadly, we have discussed all these concepts. But here, CGST Act Section 10, if you are going to learn. If you read this particular section, it says the turnover of the preceding financial year didn't exceed 50 lakh rupees. That is the earlier provision, but subsequently it has been increased to 1 crore and 50 lakh. Okay. And this provision was also there in this particular section. Also, there is a provision: the government may, by notification, increase the said limit of 50 lakh rupees to such higher amount not exceeding 1 crore 50 lakh rupees. So here, power was there with the government to increase it up to 1 crore 50 lakh rupees, and subsequently, government has increased it to 1 crore 50 lakh rupees. This part we have discussed earlier. One more thing also we had discussed earlier. That a person who opts to pay tax under composition scheme, if he's a trader, he can also do some supply of services also. But the value of such supply should be minimum. Minimum means it should not exceed 10% of the turnover. Okay. Or 5 lakh rupees, whichever is higher. Fine. Did you understand? Suppose a composition dealer is having a turnover of, let us say, 1 crore. Are you understanding the question? A composition trader is having a turnover of 1 crore. Okay. Can you tell me to what extent, for how much of value we can provide services also? Normally, services doesn't come under composition scheme. Later on, it has been added. Right. Can you tell me up to which amount of value this composition dealer can provide services? Who can tell me?
Sir, up to 10 lakh rupees.
Up to
The 10 lakhs.
10 lakh rupees you feel, because you thought 10% of the turnover. But you read what
Yes,
is
sir.
there. Okay, up to 10 lakh rupees one can do. Right?
Yes, sir.
Yeah, we'll do that exercise in that connection today. We'll see that. After that only again we'll discuss. Yeah, this is the provision of paragraph 6. I think we have discussed this in our earlier classes. The following, this part talks about, yeah, I'll be coming to that. Yeah, there is subsection 2 talks about few more things. A registered dealer shall be eligible to opt composition scheme if he is not engaged in supply of services other than supplies referred to in clause B, paragraph 6 of schedule. Okay, he should not be engaged in the supply of services other than the supplies referred to in clause B, paragraph 6 of schedule. So this is what clause B of paragraph 6 of schedule 2. If you see, supply by way of, as part of any service or any other manner, whatever, of goods, being food or any other article for human consumption, or any drink other than alcoholic liquor for human consumption, where such supply or service is for cash, deferred payment, or other valuable consideration. That is one more provision. Okay, so composition dealer should not be engaged in supply of services other than the supplies referred to in referred just now before. He should not be engaged in making of supply of the goods on which tax is not leviable. He should not be engaged in interstate outward supply. He should not be engaged in making in supply through e-commerce operator. He is not a manufacturer. He is not a manufacturer of goods notified by the government. Okay, what are the goods notified by the government? I will be showing you this thing. Just a minute. Yeah, I'll come to that. There are a few items. What are the goods notified? Yeah, these are those items: ice cream, edible oils, pan masala, tobacco substitutes. We'll be discussing all these things again when coming to the rules. You should not be manufacturing all these things. Yeah. Subsection 3 talks about a situation. The option which is aware, that means the composition option, shall lapse with effect from the date on which the aggregate turnover during the financial year exceeds the limit. Right? Suppose on a particular day, what happens? The turnover exceeds 1.5 crore. Then automatically composition scheme will expire on that day. Right? Suppose today is 12th October. On 12th October, somebody's turnover crosses 1.5. Then from 12th October onwards, composition scheme automatically gets lapsed, and the person has to pay tax under regular scheme. He has to notify the department. I'll be telling you what is the procedure for that. Okay, so that is possible. And subsection 4 talks about the taxable person to whom this provision applies shall not collect any tax, that we have already discussed, nor he shall be entitled to credit of inputs. We know that thing. If the proper officer, if the department officer has the reason to believe that the taxable person has paid tax under composition scheme, even if he is not eligible, then he has to pay the tax. That is, proper tax has to be paid. In addition, he may be liable to pay liability. He may be liable to pay penalty also. Meaning, if a composition levy is not applicable to some, still he is paying taxes under composition scheme. So he has to pay regular tax, plus he has to also pay the penalty as applicable. Right? Understood up to this? I just showed you the exact provisions of the law. Right? Section 10, subsection 1, subsection 2, subsection 3, subsection 4, subsection 5. All these things we have covered. Now we'll try to analyze those subsections. Okay? Right? Got a broad idea about those subsections, what is written in the law. We are going to analyze all these subsections now. Up to this, is it clear? Do you have some, are you getting some idea about this? Yes or no?
Yes, sir.
Okay. Yeah. So as you know, this is an alternative method. That means it's a choice. One person can go for regular scheme. One person has also choice. It can go for the composition scheme. Composition scheme is usually little easier scheme. Compliances are little less. So small traders or small service providers can opt for this kind of scheme. It is simple. The purpose of the scheme is to reduce the compliance cost, right? And initially, this particular scheme was extended for traders and for restaurant service providers only. Later on, it got extended to few other services. You know this thing. A composition dealer need not worry about the classification of the goods, because broadly he has to pay tax at a flat rate. Okay, maybe at different rates which you have already discussed. He is also not required to provide tax invoices. He has to pay tax at a prescribed percentage, and he has to pay tax at the end of the quarter without availing the benefit of ITC. And one annual return also required to be filed by a composition dealer. He cannot make interstate supplies. Okay, if a person makes interstate supply of goods, then what will happen? He shall not be eligible for composition scheme. Section 10, as you have seen, when I shown you the act itself, it shows the turnover limit is 50 lakh rupees. Section 10 subsection 1 provides that composition scheme limit is 50 lakh rupees. But however, there is a provision in that section which empowers the government to increase it from 50 lakh to 1.5 crore. Accordingly, it has been increased from 50 lakh to 1.5 crore through notification. But 1.5 crore is there for all other places. But there are some special category states. As you can see, there are 8 number of states. Can you read these states? States name. 1, 2, 3, 4, 5, 6, 7, 8. Just remember, these are some of the special category states. Can you read this name, states name? Can some of you read them?
So the special category state names are Arunachal Pradesh, Uttarakhand, Manipur, Meghalaya, Mizoram, Nagaland, Sikkim, Tripura.
So for these states, you have to remember the turnover limit is not 1.5 crore, rather it is 75 lakh. Okay, so if the turnover crosses 75 lakh, they cannot opt for composition scheme. They have to go for the regular scheme only in these 8 states. Okay, Arunachal, Uttarakhand, Manipur, Meghalaya, Mizoram, Nagaland, Sikkim, and Tripura. You have to remember this one. Okay, is it clear? Now, as I told you, aggregate turnover is relevant. For example, let us take an example here. Suppose a dealer is having an office in Maharashtra and Goa, and let us say he makes intrastate supplies, goods from both the offices. Then how to arrive at the turnover? You have to take the turnover of the Maharashtra and also turnover of the Goa. Both has to be added to find out whether the aggregate turnover exceeding 1.5 crore in this case. Right, turnover of both the states should be taken into account. If it doesn't exceed 1.5 crore, then one can opt for composition scheme. And if it exceeds, one cannot opt for composition scheme. Okay, but those 7 or those 8 states which I had showed you, or which I'm showing you right now, here the turnover limit is 75 lakh instead of 1.5. Okay, now how to compute this aggregate turnover? This is one more thing we have to remember. As you know, aggregate turnover is relevant. On that basis, you have to decide whether to opt for composition scheme or not. Okay, so these are the items which has to be included in the aggregate turnover. First is taxable supplies. If some taxable item is supplied, that's value. Exempt supplies. Exempt supplies, even if it is exempted, that turnover will be included. Export supplies. Even if GST is not payable, but turnover will be included. Interstate supplies will also be included. Okay, of the person having same part. So all these supplies made by the taxable person having the same part shall be computed on all India basis. The entire thing is to be added. Okay. And what are the things that has to be excluded? CGST, SGST, UTGST, IGST, cess, and value of inward supplies on which tax is payable on reverse charge basis. So these things should be excluded. So all taxes and value of inward supplies on which tax is payable on reverse charge basis has to be excluded. And these are the supplies which have been included to arrive at the aggregate turnover. And what is relevant, you have to understand one more thing. The aggregate turnover of the previous year is relevant. Is it not? On that basis, one will apply for composition scheme. Is it clear to you? To show it in a different form or a different chart, if you see, items which has to be included are listed here, 4 items. Taxable supplies, exempt supplies, export and interstate supplies. What are to be excluded? All taxes and cess. Then value of inward supplies on which tax is payable on reverse charge basis. Okay, so these are the things is to be added and this is to be subtracted. After that, we'll arrive at what is the turn number, and if it doesn't exceed 1.5 crore or 75 lakh, as the case may be, depending upon the state, then one person will be eligible to apply for composition scheme. Is it clear to you up to this? Yes or no? Is it clear? Can you arrive at the turn number if I give you a question? Can I arrive at the turn number which is to be considered for taking decision about levy of composition levy or not?
Yes, sir.
Okay. So this thing you have to remember. In fact, these 4 items and these 2 items we need to remember. Yeah. So tax rate of composition scheme already we have discussed, right? 1%, 5%, and in case of services it is 6%. Once again we have discussed. We'll not spend time on this, right? Now we'll discuss little more on that aggregate value. Aggregate value of turnover is relevant. As I told you, again I am telling you, all taxable supplies will be included. Exempt supplies will be included. Exports will be included. Interstate supplies will be included. And these things are to be excluded. Central tax, state tax, GST, IGST, cess. Okay. All things has to be included. Now we'll be discussing how to give intimation for opting composition levy. First, we'll be covering the situation where the person is planning to opt for composition levy at the time of application of registration. If someone is planning or someone is applying for registration, is going to obtain GST registration, then at that time also he can give intimation, or he can at that time also he can show that he would like to be registered as a composition scheme dealer. Okay, a person who is not registered and applies for registration may give option to pay tax under composition scheme in Part B of registration form GST RAG 1. When someone is going to register in that Part B, he can show that he will go for composition scheme. Okay, and the same once he mentions that thing is opting for composition scheme, it will be considered as an intimation to the department. Okay, but that particular intimation shall be effective only from the date or only after the grant of registration certificate. Okay, suppose today you are applying, let us say registration certificate you are getting after 7 days. Then after 7 days only, this particular composition scheme will be effective for that person. Okay, understood this? Are you getting me? Yes or no? But if the person is already registered, then what he can do? Already registered. Then he can also file electronically an intimation prior to the commencement of the financial year. So in GST portal, this particular form is available. Through that form, one can intimate. He shall furnish a statement in the prescribed form in accordance with the provisions of Rule 44 within 60 days from the commencement of relevant financial year. So before financial year, he has to apply, and within 60 days from the commencement of the financial year, he has to furnish a statement. Okay. And the option to pay this composition levy shall be effective from the beginning of the financial year. If somebody applies, it will be effective from the beginning of the financial year. Okay. So if I summarize at this stage, one thing you have to remember, if the person is applying for registration before, or that applying for registration, and at that time he specifies that he is interested for composition scheme, then for him composition scheme will be effective from the date of registration. And if the person is applying before a financial year, already a registered person is applying for composition scheme before the beginning of the financial year. For him, composition scheme shall be effective from the beginning of the financial year. Okay. So these are the two concepts you have learned here. Right. Now, few more conditions are there which a composition levy dealer has to follow. The person opting for composition levy has to comply with the following conditions. We have to remember this condition. He should not be a casual taxable person or non-resident taxable person. Okay. So one more thing, definitely he should be a taxable person, but he should not be a casual taxable person or non-resident taxable person. This means what? This means a casual taxable person or non-resident taxable person cannot opt for composition scheme. Do you know who is a casual taxable person? Yes or no? Can you reply? Aditi, can you reply? Question is whether you know or not.
Yes, sir.
You know it, who is a casual taxable person? Suppose you don't know who is a casual taxable person. Now you want to know, understand what is the meaning of this casual taxable person or non-taxable person. How can you know? The option available with us is that we can go and read the CGST Act. And CGST Act in section 2, you can find out the definitions. Okay, in some of the clauses, you can find out who is a casual taxable person, who is a non-resident taxable person. Okay, right now we can understand by referring to the slide, but you can search it. Yeah, here I will explain you. Section 2, clause 20 explains who is a casual taxable person. Means a person who occasionally undertakes transactions involving supply of goods or services, or both in the course or furtherance of business, whether as principal, agent, or in any other capacity, in state or union territory, where he has no fixed place of business. So this is a person who occasionally undertakes some supply, either directly or through his agent, and he does not have any place of business in the state or union territory where he is doing the business. Okay, this person will be called as a casual taxable person. A casual taxable person cannot go for composition scheme. Now, next we need to learn who is a non-resident taxable person. Section 2, clause 77 explains. Means a person who occasionally undertakes transactions involving supply of goods, services, or both, whether as principal or agent or in any other capacity, but who has no fixed place of business or residence in India. He doesn't have any fixed place of business in India or residence in India. This kind of person, what we will call him? What we can call this person?
Non-resident taxable person.
Non-resident taxable person. Right. So these are the two things. Section 277 and Section 220 explains who is a casual taxable person and who is a non-resident taxable person. And one of the conditions of this composition levy is that you have to see that composition levy dealer is neither a casual taxable person nor a non-resident taxable person. Okay. The goods held in stock by him have not been purchased from unregistered supplier. This particular condition is applicable in a particular situation. It is applicable to the builder or promoter opting for a composition scheme, not for all. As you know, earlier also you have discussed when you were discussing about the GST on real estate sector. Have you remembered certain conditions are there? They have to purchase at least 80% of the input from the registered dealer. Is it done? Have you remembered these conditions? GST on real estate sector. And the second condition is applicable only to builders and promoters, not to all. Okay. So if he's a builder or promoter and he's planning to obtain composition scheme, then he has to see that goods held in stock by him not been purchased from an unregistered supplier, or where purchased, he pays the tax under reverse charge. If at all he has purchased from unregistered supplier, he has to pay tax on reverse charge. In this condition, I will elaborate. Let me show you in which situation this condition is applicable. Yeah, when we are discussing this concept that GST in real estate sector, and there we have learned the builder promoter opting for composition scheme has to ensure these conditions. Okay, it is only for builder promoters. What is the first condition? Builder promoter must purchase at least 80% of the input or input services from registered person. Okay, in case of any shortfall, then he has to pay the tax on this. When cement is received from unregistered person, he has to pay tax on reverse charge basis. And when capital goods is received, is purchasing, then he has to pay tax on pay GST on reverse charge basis. These are applicable to the real. These conditions are applicable to the real estate sector. Okay, so here also that condition says that if the second condition is applicable to the builder promoter who is opting for composition scheme, not for others. Third condition you have to see. He shall pay tax where reverse charge is applicable. This you already know. Composition dealer will pay the tax as per composition scheme. But if a particular supplier reverse charge mechanism is applicable, then he has to pay normal reverse charge. He has to pay tax as per the rate applicable to the reverse charge on those supplies. Okay, so composition scheme is not an composition scheme doesn't give any exemption for applicability of reverse charge mechanism. This condition also you have to remember. Oh, right. One more condition is that he should not be engaged in manufacture of notified goods, and these are the notified goods. Right, these are the tariff code is here, and you see these are the notified goods. If he's manufacturing these things, then composition scheme is not applicable to him. Ice cream, edible rice, whether or not containing cocoa, pan masala is another notified item. Then all goods, that is tobacco or tobacco substitutes. So under all the goods of chapter 24, that is tobacco and tobacco substitutes are also notified goods. So composition scheme is not applicable to manufacturers of these goods, right? And
Sir,
yes,
sir, can you explain point number 2 once again?
point number two. Point number
Yes,
two, you see
sir.
what we are learning composition scheme. You see, we have learned the first of all we covered the section, what the section says, right? After that we analyze that section. Now there are certain conditions. The conditions are prescribed in the rule. So rule 5 prescribes that a composition dealer has to follow certain conditions. First condition is that he should not be a casual taxable person or non-resident taxable person. Right. This is as per rule. The second condition which you want to understand, it says goods held in stock by him have not been purchased from an unregistered supplier. That means whatever, let us say today you are applying for composition scheme. And okay, you tell me this clause 2 is applicable to whom? To whom it is applicable? Can you tell me? You can read from here. It is applicable to
Sir, to builder or promoter
builder
opting
or promoter. It is
composition.
applicable to builder and promoter. Let us say you are a builder. Okay. And you are applying for the composition scheme. When you are applying, you must be having some stock. Okay. You might be having bricks, you might be having cement, you might be having iron rods, etc. You might be having. Yes or no? Yes or no? You are applying at a particular point of time, no? So by that time, you might be having stock. Yes or no? Can you reply?
Yes, sir.
Yeah, you are having
Sir, your voice was breaking. Yes, sir. So I was
voice is
unable to
breaking.
figure. So I
Uh,
guess my network is bad.
is it breaking for others also? Can some of you reply?
No,
No,
sir.
sir,
So
no,
it's
sir.
Okay,
clear,
it's
sir.
perfect. No, okay. So we are. I am trying to explain the second provision, second condition once again. You see, when you apply, if you are a builder, we are applying for the composition scheme. At that point of time, you might be having some inputs, not inputs, some stock, right? So what is expected that those stocks should not have been purchased from unregistered supplier. You must have purchased those stocks from registered supplier by paying GST, right? But by any chance, if at all you have purchased it from unregistered supplier, or you can say where purchased, then he pays the tax under reverse charge. Or if at all it has been purchased from unregistered supplier, you must have paid tax on reverse charges. These two conditions has to be met. Okay. To understand these conditions, we have to understand the GST provisions which are applicable to real estate sector. And this concept we have learned earlier. When some builder or promoter is opting composition scheme, builder or promoter works in real estate sector, is opting for composition scheme, he has to ensure these conditions again. What are the condition? At least 80% of the inputs should be purchased, or 80% of the input services should be availed from registered dealers. If there is any shortfall, he is required to pay tax under reverse charge. Suppose 80% is not from registered dealers, it is from unregistered party, then he has to pay tax under reverse charge mechanism on those products. If cement is purchased from unregistered person, tax has to be paid under reverse charge basis. If some capital goods are also purchased, tax has to be paid on reverse charge basis. Okay, so these are the conditions which are applicable to builders and promoters. And the same thing is highlighted in the rule that at the time of availing, at the time of applying for the composition levy, if stock is there, then one has to ensure that stock has not been purchased from unregistered supplier. Or if it is purchased, tax has been paid under reverse charge basis. Understood second point? Is it clear?
Yes, sir. Yes, sir. It's clear now.
Okay. Third point, I think it is already clear. He has paid tax under reverse charge where applicable. Fourth point is that he should not be engaged in manufacturing of this notified goods. We call it ice cream, edible rice, ice, pan masala, and tobacco. And fifth is interesting point. He shall mention the word composition taxable person, not eligible to collect tax on supplies. This is an important point. Whenever you are purchasing something from a composition dealer, you ensure that he has mentioned these wordings. Composition taxable person not eligible to collect tax and supplies at the top of the bill. He is issuing a bill, it should be mentioned. These wordings should be mentioned. Okay. And one more condition, he shall mention the words. These things has to be written that composition taxable person. Where he has to write it? On every notice, signboard, displayed at a prominent place, at his principal place of business, and at every additional place of business. So everywhere he has to show this particular thing should have mentioned that composition taxable person. Okay, these wordings should be there in every notice, signboard, prominently displayed, and in every bill, that is bill of supply. These wordings should be there. Composition taxable person not eligible to collect tax on supply. Understood these conditions? Yes or no? Condition number 5.6. Did you understand?
Yes, sir. It's clear.
Okay, fine. Casual taxable person. All these things you have covered. Yeah. Who who are not eligible to opt compositions. Okay, supplier of services, but some conditions are there. You see, restaurant services already covered. They can go for composition scheme. Other service providers also can go for composition scheme, provided that turnover is within the limit of 50 lakh. Then supplier of goods which are not leviable to tax. If tax is not leviable on the goods, they cannot opt for composition scheme. Supplier of interstate outward supplies, they also cannot opt for composition scheme. Person supplying goods through e-commerce operator, they also cannot go for composition scheme. And so manufacturer of ice cream, pan masala and tobacco. So these are the people who cannot go for composition scheme. Can you remember this? Okay, just have a look. But here in that context, you have to remember one more thing. As you know, composition dealer cannot make interstate supplies. Yes or no? Can a composition dealer make interstate supplies?
No, sir.
No. Now question is, yeah, can he avail can he purchase goods from interstate? Can he make interstate purchases?
Yes,
That
sir.
means whether inward
Yes,
supply.
sir.
Okay, right. So that idea you are already having. Okay, there is no restriction for the composition dealer to receive interstate inward supplies of goods. Okay, and to make interstate inward and outward supply of services. Goods he cannot make interstate outward supplies, but he can receive. He can receive interstate inward supplies of goods. Right. But so far as services are concerned, supply of services are concerned, right? So he can make interstate inward supply as well as outward supply. So this difference you have to remember and you have to understand
Sir,
very
that
carefully.
means if the composition taxpayer is a service provider, he
If he's
can
providing only services, he can provide interstate service.
okay, sir.
He can provide interstate service. Okay, is it clear to you? So far as interstate transactions are concerned, now you have understood there are differences between the difference in treatment of goods and services. Is it clear to you? With technical point,
Yes, sir.
right? So far as received, no issue. One can receive inward supply, be it goods or services, both the case. But so far as outward supply is concerned, a composition dealer cannot make interstate outward supplies of goods, but a composition dealer can make interstate outward supply of services. Okay, is it clear? So like this, few more detailed or minute points are there. We'll be covering this thing in the next session. We are closing this session right now. We'll again catch up very soon. Okay, after 15 minutes, we are going to catch up again and continue other points in detail. Okay, so thanks a lot. Thank you very much.